Right. Good afternoon, YouTube. Thank you to everyone for joining us today. Appreciate it's been a pretty quiet start to the week in terms of data. Let's have a quick look at the raft of not really important data coming through so far. Very little to get your teeth into. Yeah, everything kind of yellow, a little bit of orange on the Kiwi at 4 a.m. if you're up for that. Yes, on yesterday morning at 4 a.m. on a Monday. Well done to those who were. But yeah, no, not huge amounts of data to get your teeth into so far this week. But this week is very much cut in two, because from tomorrow, really from 2:30 a.m. tomorrow morning, we get the raft of CPI. Obviously, the second week of the month is when we get the CPI data traditionally, and this time we have a decent amount coming through tomorrow, starting with the Chinese CPI and PPIs. CPI is really the big one at 2:30 in the morning. Probably won't be up for this. Reason being, we also have a 7 a.m. German CPI, and those numbers were really moved the DAX last time out. So that's something to pay attention to if you are trading tomorrow. I think there is a decent opportunity to make a little bit of money, whether you want to trade the indices or the currency. I would probably favor currencies at the moment. The indices have really struggled to see too much follow through. For example, if we take a look at the, S&Ps, when we had the non-farm payroll figures last week, and we had this initial sell-off. Am I in the right place here? Yeah, here we go. We have the S&P sell-off at 130 on the NFP, and initially on the open, when the market came back to cash, we kind of gave it all back up again. Tried to have another go, and again, we're just getting this kind of chop in indices at the moment. We say this a lot. It is the summer, so the indices aren't really quite as don't see as much follow through as you would like to see. Whereas if you flip that on its head and look at the currencies last week, the dollar yen, for example, yes, we didn't see a huge follow through, but it was very much a continuation trade. So similarly, after that 130 print, it didn't give it back in the way that the indices did. And even if you were buying this 5 minutes after the figure, which would be a little bit late in my opinion, then you still managed to get that continuation through into the European close before it then eased off a little bit and kind of flatlined through the close in the US. So yeah, just to show you that certainly what we've been seeing is that the likes of gold and the currencies have been a little bit better in terms of reaction of late. So tomorrow morning at 7 p.m. I think I'll be having a look at one of the euro currency pairs. Inflation is obviously the biggest data point pretty much we've had all year. It's been one that's moved the markets the most aggressively, in my opinion. So definitely one to get your teeth into. And then later on in the afternoon, we have the big one, the US CPI, or more importantly, I think the US core CPI coming out at 130. Obviously expecting this to off a little bit. You need to create yourself a little range here, but the CPI data has been kind to us in recent times. The reason I'm eyeing core CPI is it has a higher weight of the wage component, and they really want to see, certainly what we've been reading and hearing from Fed members, is they want to see the core CPI down maybe a couple of months in a row before they can even consider taking their foot off the brake pedal with these higher interest rates. And given the average hourly earnings last week on the NFP was so high, I'd be interested to see how this has come down, if at all. So that's really where we get into the rest of the week. PPI is the following day, and then a couple of nice bits on Friday too. GDP in the UK, followed by University of Michigan consumer sentiment on Friday. So the week is very much cut in two, with pretty much no useful data out Monday, Tuesday, but plenty to get our teeth into later on in the week. So on days like this, how do you trade? Well, I mean, you can trade in many different ways. We've had some news out today from in the oil market. We had news that the Russian oil pipeline has suspended the southern leg of the Druzhba pipeline, if my pronunciation is correct. So you can wait for actual pieces of real live news to come through as a way of trading, and that can give you an edge in markets. If you have a look at the oil price from that news around 11:15 today, we saw a decent rally higher up to where we were just at the open at 2 o'clock. We were up the best part of $2 on that news, and it wasn't the hardest to catch. It did kind of show decent continuation as well. The oil market does often show a little bit more of that continuation than others. So yeah, the news that drove that market higher was certainly one. And then obviously your technicals, they tend to perform a little bit better when there's less news to kind of pin your hat on. So I would suggest, maybe having a look at key levels today as a way of trading. But the thing that I'm most fascinated about this afternoon is the close in the US markets. We've seen the day before the CPI data, there's been a lot of long liquidations in US equities. Certainly into the close a couple of months ago, it was from 7 o'clock. I think we started around 5:30 or 6:30 last month, where we saw the selling start to come in. Because if you want to trade, if you can only trade cash equities, the last time you've got to trade before 2:30 tomorrow, which is crucially after this data is released, is just before 9 p.m. this evening. So if you want to take a little bit of risk off the table after what has been a pretty impressive move in US equities over the last couple of months, really since mid-June, a lovely move to the upside on the S&Ps. If you're happy to take some risk off the table, then you might be looking to get a little bit of that risk off later on in the session today. So that's something I'll be eyeing as we move forward through the rest of it. So in other news, we had Pelosi was out today saying she had overwhelming support in Congress for her Taiwan visit, and China will not be allowed to annex Taiwan in the way that Russia is trying to do with the Ukraine. Former President Trump had his Mar-a-Lago house raided by the FBI overnight, and they have broken into his safe to get back some documents that he was not too forthcoming with. So that is some other news out of the US overnight. In the UK, we did have plenty out today as well. We had Ramsden talking about the fact that they're looking to kind of sell the gilt markets. I was talking to you about this morning. We had that initial look at the gilts when they open at 8 o'clock, initial pop higher. But if as we mentioned this morning, Gordon Brown sold the gold like this. He telegraphed that we're about to do all these sales. He did it at a time of year that wasn't too prudent. In the summer, he started it when gold tends to be pretty weak and without too much demand through June and July. He did it at the bottom of a 40-year cycle. So he managed to kind of balls us up as well as you could have hoped. And perhaps Ramsden is kind of telegraphing these gilt sales in a way that perhaps they shouldn't. Because if you know that there's going to be a decent amount, about 40 billion, which they're going to start doing as of September, then you might want to get short the gilt market. And the initial spike was to the upside, but we've had a decent kind of grind lower on that, albeit we're not too far from the close. So it hasn't been the cleanest move on the UK 10-year bond market today. But I think this is a market to kind of follow over the next few months, because if you do start to see those sellings coming in September, you might see this market starting to reprice lower. And then once those sellings are complete, there'll be another nice trade you might expect on the other side of that as well. So if you haven't followed the gilt market, it might be a good opportunity to start doing so. Bonds have been in vogue this year, as Neil has said on countless occasions. So if you want to expand your knowledge of trading, then maybe having a look at the bonds at the moment might be a smart thing to do. So let's look at the US markets as we approach the open. We're seeing this weakness that we've seen across Europe today has been echoed. This is when we had that news out about Pelosi talking about making sure that China can't get hold of Taiwan. The markets didn't respond to that very quickly, but that again has been faded. Seeing a lot of fades on moves in indices at the moment. So if you are curious about what other markets are available to you, then maybe looking elsewhere other than indices at the moment, or even trying to get on the fades, right? You can wait for the news to happen. And if you start to see the price action fail to follow through, then you can look at trying to fade these back to levels that they were at previously. Those have been slightly easier trades, especially in the weaker and quieter summer months. So if we zoom out on so one of the other things this morning we were looking at was the DAX, because we had quite a nice little structure on the DAX. If we zoom in here, we had a nice little gap close on the daily from back in June, which we tagged on the 4th of August last week. And since then, we've now given up today this nice upward trend line. It's almost like a bit of a rising wedge pattern that's kind of come into play here. We're almost seeing like a nice series of kind of less steep highs, but steeper higher lows. But that has been given up today. With the CPI data, it's not something I really want to jump on as a swing trade right now. I wouldn't mind seeing that data come through tomorrow before getting on it. But the fact that we've seen this technical breakdown of this trend line, to me, is starting to flag that maybe there is something in the mix here. And maybe you'll see something echoed across the global risk market with this, if this does start to continue lower. These wedge patterns tend to be some of the better in terms of pattern trading, some of the more high probability trades, and you normally get some pretty nice continuation moves. We've seen a few of them this year. So let's see if we can get a nice technical setup where it's gap closed and then broken the wedge. But as I say, I'll be waiting for the data confirmation tomorrow, but that might get me aggressively short DAX if the inflation figures are higher. So market open. First 15 seconds, not too much going on. We've got the S&P top left. NASDAQ on the right-hand side here is showing a little bit more weakness. The S&P is up slightly, and the Dow as well, bottom left, is also starting pretty strong, as the S&P itself is. Decent start for the S&Ps. What, 6 in the first 30 seconds, not too bad. And always worth keeping an eye on the US bond yields as well. We aren't at kind of critical levels on the bond yields right now. They haven't been aggressive, rising higher. They've been easing off quite nicely in recent times. So that has been one of the reasons why we've seen some nice appreciations in the indices. But yeah, always worth keeping an eye on this, because if you do get big moves on the bond yields, and you would expect big volatility in US bonds on the CPI numbers tomorrow, then that can kind of telegraph which direction you might want to be trading the indices as well. But yeah, a little snap back into the value area low on the S&Ps. Nothing too clear here. For one, I'm not going to be doing a great deal, I think, until we've seen this market settle down, probably from maybe the European close for me, maybe from 5 o'clock. You start to see some weakness come through. I'll be interested. I'll be disappointed if we sell off aggressively beforehand, because I've been looking at eyeing up this trade for the last week or so. We've been talking about getting those late sells in on the US stocks. So if it goes without me, then it goes without me. But for now, I'm hoping for a little bit higher on the S&Ps, so we can get a bit more of potential downside as we move forward. But that downside seems like it's coming in so far. NASDAQ is below the low of the pre-market. S&P obviously hasn't got there yet, nor yet has the Dow. So the S&P, so the NASDAQ is the one showing the real weakness here, and that's reflected with it being off 1.2% today versus 0.3% for the Dow, and only a mere 0.5% so far for the S&Ps. FTSE, the resilient stock index of the year, green on the day, and likes to buck the trend. Deals quite well with higher interest rates and higher oil prices. We are certainly in an interest rate hiking cycle, and oil is starting to move a little bit higher again today. Those are probably the reasons why you see the FTSE being a slight outperformer in Europe. So yeah, with it being a quiet day in the markets, I'll probably leave you there. We'll be back with you on Zoom at 7:50 tomorrow after the German figures. So use this as an opportunity to get your plans done for that 7 a.m. figure. We're back with you on YouTube for those of you who only join on there on Thursday. If you are only with us on YouTube, then you can sign up to our Zooms as well if you look in the description in the link below. And if you haven't already done so, please subscribe so you can follow our lives when we're with you. So thanks for joining us.